Welcome back to Mid-Cap Radar. Well, we have a very important corporate conversation lined up. Hitachi Energy, that particular stock, has seen a bit of selling pressure after reporting its Q1 results. Now, we are seeing a quarter where the ordering activity was very strong and the order inflow too was quite strong. We are now joined by Mr. N Venu, who's the MD and CEO at Hitachi Energy India. Thank you so much, Mr. Venu, for joining us. First up, what we want to understand from you is order inflow this time around was very, very strong. Help us break this down in terms of both HVDC as well as non-HVDC orders, and how has the non-HVDC order side of the book grown this time around? And a quick clarification, do you have any exposure to the US market in terms of exports, sir?
So thank you, Vivek, and good afternoon, everybody, and it's a pleasure joining you on your show. So let me take 30 seconds to demystify our whole strong Q1 results, which we have produced yesterday. And as you have seen, our orders are very strong, 365% year on year, and our revenues are also pretty strong, 15% growth on year. And we have also have all-time high of order backlog, close to 29,000 crores, and which is also, and since our revenue has grown 15%, and our gross margin is also improved by almost 650 basis points, and which is also culminated into EBITDA margin improvement of close to 700 basis points. And we have also had a very strong generation of the cash. So all these things is showing us a very strong momentum to our entire FY 25-26. And coming back to your second question on our thing, our exports, as you know, our exports are generally in the range of 25%. And our exports to the US is very, very low at this point in time. And it is also for us, any additional tariffs, etc., is a cost neutral, it's a pass-through mechanism. So that way, at this point in time, we are not really concerned about the tariffs. But as you know, tariffs is a bigger item, agenda, and we really need to look at it, how it will pan out on an overall basis.
We take that point, and it's an ongoing situation as well. So we'll keep assessing that as and when there are more updates there. Revenue growth at 11%, it's healthy, but maybe the street was expecting more basis the order inflow. Has there been any delay? Do you think that is something that will be accounted for in Q2? And for FY26, what kind of margin number are you looking at?
No, there are no delays, first of all, and as you know that the large projects we have been saying, like HVDC projects, it's basically a 48-54 month schedule completion, and normally the first year the revenues won't come, and the revenues will start picking up the second year of the ordering out, and that's what we have been saying for HVDC projects which we have booked. So the revenues we can expect in the next financial year, that too the second half of the next financial year, will come in a quite substantial impact. And last year we had a very good growth. On an overall basis, we had a 24% growth. On top of that, we are growing 15%. I think it's a very good growth in my view, without considering the large orders.
Understood that. Mr. Venu, one thing that the street wants to know is that I believe you've actually told the analyst community that you're anticipating close to 2 large HVDC orders every year. How is the order prospect pipeline looking at? Have you placed bid in all of the recent ordering or the tendering that has happened, and probable size of the order that you're expecting in FY26 and FY27?
So what I have told the analyst community is that, to manage the complexity of energy ecosystem in India with so much of renewable coming in, country needs to have, many HVDC projects. And we see the pipeline of 2 HVDC projects coming into the market for bidding every year from now to at least next 3 to 4 years. This is what we are saying. It comes from the market. It's not that we're going to get it. We will be bidding all the projects. We will be bidding every project. We look at every project, how it will fit into our delivery schedule, our manufacturing schedule, our risk reward. All those parameters will be looked into it, and we will be bidding for those projects. And we are also, as you know, we are also expanding our manufacturing in anticipation of not only the HVDC, but also other demands in the country. We are, as you know, we have announced our 2,000 crores capex, which we have been, spending in all of our portfolio expansions, both brownfield expansion as well as greenfield expansion.
Mr. Venu, last question before we let you go. What's the margin differential between HVDC and non-HVDC orders? That's something that everyone's been eyeing out for.
No, margin difference, every project we are looking at, and it is in line with our margin aspirations. So we don't.
That's around 10.5%.
So we don't want to say, as I said, we are improving it, and I made it in your own show last year that we entered into double digit. We entered much ahead of the curve, and we are improving further. And this year also, we will do better than last year.
Okay, thank you so much, Mr. Venu. A very short conversation this time around, but we hope to get you soon to discuss more, especially as far as the ordering prospects are concerned for your company for the remainder of FY26. Thank you once again. But with that, it's all the time we have on this edition of Midcap Radar. The market recovery continues. Your stocks when we return.